I think that after 2 years weathering the storm, we can now say that we're strongly positive on the outlook of the global real estate market. We believe it is supported by solid fundamentals, including healthy supply-demand balance and robust prime yield spreads to start a new cycle. In addition, while rates and expected inflation have now risen, they remain historically low. As a global investor, while we believe that diversification is key, we see a wider opportunity set to approach this new cycle. This includes a combination of resilient and mature sectors, such as residential or well-located office assets, together with dislocated sectors offering discount and repositioning opportunities, and finally, new trends to capture, with, for instance, data centers, cell towers, or industrial subsectors. Private equity real estate intends to create value at the asset level through active asset management in order to generate a capital gain after a 3 to 5 years holding period. On the other hand, the place you live in or a rental flat has a longer term and more passive profile, with in general reduced potential for capital gain and low income return unless there is an excessive use of leverage. Investing in global private real estate is a way to create alpha in a portfolio, but has high barriers to entry, including local knowledge and network, deal execution capabilities, and asset management expertise. This is exactly why we invest alongside the best professionals globally. Value-add real estate investments target underperforming assets in order to create value by doing operational, financial, and cosmetic improvements. Those assets could be a residential building, a logistic warehouse, data centers, or any type of real estates. Once the asset is improved, this ultimately translates into longer-term and higher rental income, enabling a capital gain at exit. While the real estate markets benefited from a decade of decreasing rates, we believe that such a value creation approach intended to increase revenue is the perfect hedge against low or increasing rates in the near future, in addition to making the assets attractive for the long term. At Hermance, we build global real estate portfolios following a value-add strategy and targeting highly attractive risk-adjusted returns of minimum 12% net IRR to our investors. In order to achieve this objective, we invest alongside the best professionals globally, creating a diversified exposure to various sectors, geographies, strategies, and vintages with one single commitment.
Investors cannot afford not to have an allocation to private markets. Private markets offer specific exposure to a segment of the market which is nearly difficult to access. The number of privately held assets vastly exceeds the number of publicly traded stocks, and experienced private market managers take advantage of these deep markets by finding assets that they can develop, transform, or reposition, and then sell at a higher price. Investing in private markets gives access to a superior stream of returns that simply cannot be accessed via public markets, bringing an important element of diversification to a liquid portfolio.